Every paycheck you get has already been robbed. And honestly, your employer did it with a smile on their face and a government form in their hand. It's called tax withholding. And it's basically the IRS setting up a layaway plan with your money before you ever touch it. Think of your paycheck like a pizza, except before it even hits the table, someone already took 2 or 3 slices and labeled them federal taxes, state taxes, and we'll figure out the rest later. Your employer is doing the slicing, not because they want to, but because Uncle Sam said so. And nobody says no to Uncle Sam. When you first got hired, your boss handed you a little form called a W-4, which sounds like a droid from Star Wars but is actually way less fun. That form told your employer how much money to pull from your check every single pay period to cover what you'll owe in taxes at the end of the year. Here's where it gets interesting. If your employer withholds too much, you get a refund in April and everyone acts like it's free money, but it's not. You basically gave the government an interest-free loan for 12 months, which is very generous of you and very convenient for them. On the flip side, if not enough is withheld, you owe money when you file your taxes, and suddenly, April 15th feels less like spring and more like a final boss fight you didn't train for. Worse, if you underpay by enough, the IRS can charge you a penalty, which is their way of saying, you should have planned better, buddy. The good news is, you actually have control over this, because you can update your W-4 anytime during the year, not just when you start a new job. Life changes like getting married, having a kid, picking up a side hustle, or losing a dependent can all shift how much you should be withholding. The IRS even has a free tool called the Tax Withholding Estimator on their website, and it's surprisingly useful for something built by a government agency. You plug in your income, your deductions, your filing status, and it tells you whether you're on track or heading toward a very unpleasant surprise. A lot of people ignore this stuff because taxes feel like that one homework assignment you keep pushing to the bottom of the pile. But reviewing your withholding once a year, maybe when you file your taxes or after a big life change, is like checking the oil in your car. Boring, fast, and way better than the alternative. Here's a fun fact that nobody talks about at parties. The modern withholding system was introduced during World War II as a way to collect taxes faster and keep money flowing to fund the war effort. So every time your employer skims money off your paycheck, you are technically continuing a 70-plus-year-old wartime tradition. Congratulations. Some people deliberately overwithhold because they like the feeling of a big refund check in the spring. And honestly, if that's your financial motivation strategy, no judgment. But that refund could have been sitting in a savings account earning interest all year instead of chilling in a government filing cabinet. The sweet spot most tax nerds aim for is withholding just enough so that you owe a tiny bit or get a tiny refund, because that means your money stayed with you all year working for you. It's like winning the tax version of The Price is Right. You want to get as close as possible without going over. If you went freelance, started a side business, or picked up gig work on top of your regular job, your withholding situation just got a whole lot more complicated, and you might need to start making quarterly estimated tax payments on top of everything else. Ignoring that piece is how people end up owing $3,000 in April and staring at the ceiling at 2 in the morning, wondering where it all went wrong. The beautiful, slightly annoying truth is that withholding is just a system built to make something complicated feel automatic, and it mostly works as long as you pay attention. A quick check-in once a year keeps everything running smoothly, prevents penalties, and helps you actually plan your finances instead of just reacting to them. Understanding this stuff isn't about being a tax genius. It's just about not getting blindsided by a system that was always meant to work in your favor if you know how to use it. And the moment you stop treating your W-4 like junk mail and start treating it like a dial you can actually adjust, you take back a little more control over your own money. If any of this made a light bulb go off and you want to dig even deeper into how all of this works, or how a company like ours helps people make smarter financial decisions, go ahead and check out the links in the description to learn more about what we do.